Industrials among the leaders today. Caterpillar up 2%, hitting its highest level since January. Melius Research upgrading the stock to a buy, writing that AI-driven power demand could be a game changer for the company. Rob Wertheimer, the analyst behind the call, joins us here on set. His updated price target, $500, is a street high, according to FactSet. Rob, great to see you.
Good to see you.
So this is actually a tech-adjacent name, an AI-adjacent name, and that's why you like Cat.
There's a change in the world coming. I mean, the AI wave is just hard to grasp, and really the demand just being pushed through in power and grid is stunning, and it's creating new opportunities that didn't exist before.
I think most people think of Cat and they think of big machines that dig earth, move earth, etc. Yeah, exactly. But we're talking about turbines. We're talking about things that power the energy trade.
Yeah, so Cat has always had a huge engine business, but they go into big industrial things. They go into mining trucks, into frac suites, into tugboats and ferries, and just massive amounts of power, but not on the grid. They've also done backup power in the past, and still do. But in more niche applications. And what's changing now is the grid is under strain. So, there's pockets where you don't have power. There's just the AI demand is massive, and so people are putting in their own power plants at data centers. And so the whole world has changed, and that's creating a new opportunity.
So a name like this, I think of historically very cyclical, right? Is now trading at a market-ish multiple, maybe a tad under, right? Yeah. And it used to be that they would, that multiple would change dramatically. Is that phenomenon gone, or how do you think about that?
You're 100% right. And there's a couple things that have changed. Cat has become a better and better managed company with more and more aftermarket. So they've tried to steady out some of that cyclicality. You also just haven't seen a mining upcycle in 15 years. And so I don't think that we've had a bubble in Cat in a long, long time. So one answer to your question is we're at a position where you worry a little bit less about things falling apart and a little bit more about the upside and missing it.
Rob, how about the rest of the mining cycle? And I guess I know we're here talking about Caterpillar, but are there peers or the Kubotas of the world? I mean, where else could you be excited? Is this a lateral trade as well? And copper's hit all-time highs. So if you're mining almost anything in the industrial metals or in the precious metals world, it seems like they've got spot prices that say go out and just mine as much as you can.
100% they do. The miners have been disciplined in CapEx nonetheless. Yeah. I think you saw 15 years ago a bunch of mining management teams turned over and was like, hey, we're not going to spend the CapEx in the way that we used to. So we haven't seen that kick off on the equipment side yet. Komatsu is your other major player, and Cummins provides engines to the industry. So there are ancillary plays, but that cycle hasn't kicked off yet. Again, some of the same engines go into data centers, and so that's where you have the explosive demand.
I know that it's early, but when you think about a 50% tariff on copper, for instance, there's a general push to have everything made in the United States, dug up in the United States. And so do you think about that as spurring new mine development, or is it just way too early? Because we haven't had a new mine, a copper mine in the U.S. for more than a decade or so?
And to your point, developing a new mine will take you 10, 15, 20 years. I mean, there's environmental stuff that maybe we have a little bit more of in the U.S. than other places. But anywhere in the world, it's going to take you 10 or 15 years. I do think there's been a change in the world, in reshoring, in supply chains, partly spurred by President Trump's actions this term, but also the first term. And so you're seeing more investment in the U.S. Mining is a slow one, though.
So when you look at that to that point, so roughly half is international, roughly half it's probably a little more weighted towards North America. So that makes you more bullish to everything that the others have said about Trump building America, mine in America, everything being pulled back to America. Is there any part of this government dependent on dollars? Because obviously that's been a very big stick point where we've seen a lot of companies pull a lot of revenue from the governments.
Not so much directly. I mean, look, I do think that the change over the last 8 to 10 years, including President Trump, then President Biden, was to direct more investment with different policies to the North American market. So some of that might drive construction, the infrastructure bill and things like that. But in a general sense, the soaring markets are driven by the tech giants, have lots of cash and a need to invest it.
While I've got you here, on an adjacent question, United Rentals, which is in my acronym some way or another. Yeah. I think you're the street high, are you not?
We usually are, yeah.
Yes. Okay. So what's your feeling? I mean, it's adjacent to Cat.
Yeah,
sure.
So it's been one of our favorite stories over the last 7 or 8 years. And in my job, you often do all the work and find out you agree with everybody else. This is one where we disagreed. We thought it was a phenomenal growth story that was underappreciated. And they continue to churn out. So construction equipment, other equipment, rental in the U.S., growth industry, growth leader, essentially like a Walmart of decades ago, just expanding and creating new opportunities. It's fantastic.